And everybody, it's Tim Reazor with Revere Asset Management. Let's see here, just before 3:30 on a Wednesday night. So very quickly, stock nerds, market lovers. Before we begin, listen, the website, if you haven't been there, has been updated. If you're on your mobile device watching, a lot of you watch these videos and consumer content on your mobile devices, iPads, iPhones, whatnot, Galaxy Note tabs. If you ever want to talk to us, all you have to do is hit that button right there, and it'll connect to your phone or a Wi-Fi calling device. And you'll get right to the Revere hotline. As a matter of fact, you'll talk to it literally leads right to Danny's phone number. And so, and by the way, if you don't know who Danny is the owner of the firm, and I'll show you him in a moment. But you're talking to America's fiduciary right away, and so it's the quickest way to get a hold of us if you're so inclined. Now, listen, if you want to see the podcast from last week, it is right here. So you go to Tomorrow's Insights, click the podcast tab. And right here, this podcast sets up tonight's video, and what I'm about to show you, what is already in motion and place happening. So we'll get there in a moment, but right now you got to close, you got a low bar, you got a sell signal on the indices. What I'm trying to tell you, stuttering through there. I don't want to cover that with you here in a moment, but the podcast sets up what's probably in motion right now. And I believe that this it's not that long. Today's the 23rd, probably through the end of the quarter. Doesn't have to. It's a market. Anything can happen. And after the end of the quarter, what happens? Well, we start getting into April, which then starts earnings and the optimism that's about to come with earnings. But we'll see if that actually develops. First things first, if you do want to get a hold of us, you can hit the contact button up here and you can send a quick note. It goes right to our inbox, and we'll get that. If you ever want to call, right there's the phone number. Of course, if you want to stop by for an in-person meeting, there's the address. But if you want to see the strategies and who we are and what we represent and the value we really bring to our clients and the fans of Revere Asset day in and day out, 5 videos, 6 videos really a week, and a podcast. See the strategies here, the portfolios, the core positions, the hybrids, and then you can see the team here. And so there's America's fiduciary right there. Danny Stewart, if you want to see, this is what sets us apart from everybody else in the free world. If you want to talk to the folks like Don and Hunter who are making the decisions, what goes in the watch list, what goes in the portfolios, what are the buys, what are the sells, and all the whys behind everything, you have access to them. And that's a pretty special thing. So with that, stock nerds and market lovers, these videos, they are for what? We produce these videos for your edification purposes only. They're never, ever to be misconstrued as advice. Want advice, need advice, seek advice, all you have to do is, in fact, give us a call. Want to get a hold of me? Tim@revereasset.com. Twitter is super easy for me. It's like we're texting buddies. I leave my DMs open, so you can jump on Twitter, @TJ Reazor is my handle. And then you can just shoot me a note. It comes right there. I get back to you, most likely during the same day. Email, my inbox fills up. And I just saw a message I missed from a really awesome stock nerd, and so it's about the ETF strategy. I will get back to you. I promise. I'm sorry that I missed it, but I will. I promise you, I will get back to you. If not, I'll answer it on the podcast coming up in 2 days. And so, with all that said, let's take a look at what's shaping up here. So look, there's no one piece of information, right? There's not one piece of information that we're ever going to look at that's going to make a decision for us. I mean, unless the whole market just falls apart, then that's price, right? Price could be that one piece of information, but most oftentimes we're not looking at things in a vacuum. We're looking for an amalgamation of information. And I want to just point out today, this put call ratio is low. The 10-day moving average is pointing down. This is a bearish put call ratio, not a bullish one. A bullish one would be something up here, moving at 10-day moving average pointing higher, getting close to that 0.9 level, 0.88 level. And you can see you start getting little bottoms when that happens, like right there, or like right in here. Even though it's not as high as there, and you start getting that action right here. This is a bearish put call ratio. You can see the ADD has pulled back dramatically in the afternoon, and that sets the stage up for this. And so, well, what is this, Tim? This is just a chart of the SPY. Well, what's happened today here is you get a close. This bar is closing below the high bar or the recent high bar, and that's kind of a big deal. And all these signals, and you can see I have it denoted with an arrow. This isn't the biggest, this isn't the end all to be all of information, right? Sometimes these signals work brilliantly, right? And sometimes they work like for a day, and then you get a little but then higher, or let's see where it didn't work. Right here, right? It's just information, okay? And but you can see then it later worked. It's just information to be taken in the context of the overall market. And so what are we looking at? Let me zoom a little bit in on this SPY chart, and then we'll go to the NASDAQ. We're looking at the market hit resistance at a big supply zone right here. There are a lot of people that had, you get this dip, and then they're like, buy, 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 and but then they're trapped, right? And they're like, okay, they do the prayer that every trader and investor who's ever traded in the history of time has always done when in trouble. Dear Lord, please, this is like, let this go back up, and I swear to God, I'll sell it and I'll never do it again. And so it doesn't matter if it's an indice, a commodity, a stock, it doesn't matter what it is. We've all done it. And we're at resistance here at a major supply zone. And it just kind of makes sense that we'd start this evolution to back test and find where the liquidity is. How strong is the seller, is the buyers, right? How strong are the buyers' resolve? They could come and keep buying it. They're not going to sell, or are you going to keep hitting stops? Because what will happen is if they keep hitting stops, they're going to keep going. By they, I mean the machines, the algorithms are going to keep selling until the stops have all been tripped. And I would think that they're most likely going to get tripped in this 436, 435 zone. They're going to come back and fill that area. And from where we were, where was this high? Yesterday at the high yesterday was 450 down to 435. That's a pretty big move. And some of you are like, well, make that look like that on the SPX. Sure. So let's do this. Let's come up on, I see you got the close here. So 460, so I think you're coming back here to this 450, 460 zone. If you were to breach this zone, if you're to breach this zone, then, the next logical stopping point would be this 4,300 area, which kind of makes sense that you would try to find support in this structure here. It doesn't have to happen this way, but you've had a lot of interesting time frames start to, if you lose, like see the gap here, if you come back to this gap fill, that's 488, then there's 450. These smaller time frames are kind of telegraphing what may be afoot. I mean, look at this hour. This has been a big move. This has been about an 8% rally. It's a huge move. And so now, are they going to come and try to backfill it? That's a cliff, folks. Like you break free of this structure here, they would call that a cliff. And so super curious to see if what transpires over the next 2 trading sessions, because it's setting up to do a little bit of backing and filling. I would feel more confident. Let me show you the NASDAQ. Well, I'll show you this. I'd feel more confident. You're like, yes, the end of the road is now. And you better bear down and all those other silly puns. If this was inverted, but it's not. It's not inverted. So on Wednesday night, the people that matter the most, right, that trade in the VIX, that hedge in the VIX futures, that trade the VIX futures, they're not concerned right now, okay? And I think it's important to note that if this were to invert the way it was for a month, the way it happened the Friday before the invasion back in February, I would tell you to Katie bar the door. But I'm not, because I have a few pieces of information, but I don't have all of it. Let me look here at this chart. And so let me show you, let me just pull this up, make this a little bit bigger, zoom in. And where did you come back to? I think it's important to understand the weekly mean, the granddaddy of them all, the weekly mean. And so if the weekly mean gives way, you're coming back in this zone. I'm not saying you're taking it out. That I'm not making some fire and brimstone prediction. I'm just saying that you're at the weekly. You're at major resistance, and I just think it's important that you understand that. And some of you are going to say, well, Tim, if the VIX futures aren't showing that in this This is the people's VIX, the cash VIX. Like this VIX is low. Right now, the VIX isn't giving you any warning sign. And that's the thing. If the VIX were to start perking up, it's the algos that are going to get you. You know, like Miami Sound Machine Rhythm are going to get you. The algos are going to get you. And because the algos, as soon as this VIX picks up, they're like, oh, the VIX is alerted. We better start selling. And their programs start selling, and they're looking for those pockets of liquidity. And it's just a spiral before you know what, Bob's your uncle, and they got you again trapped in a long that you might not want to be in. And so you want to be aware of these levels. And by the way, just because I'm saying it doesn't mean it has to happen. Let's look at the Qs. Qs are the same situation, right? We'll get this, you can see here, if we're on an hourly, we'll just work our way back up. It's a big old range. Where do I think the first stop is? I think it's at 343, 344, right here, the hourly 50. I think you're coming back to the hourly 50-day, right where I'm kind of tracing. And we'll work our way back to the 4-hour, and I'll show you where that is. It's right in here, which would be the 4-hour 21. Okay, so hourly 50, 4-hour 21. And then you're like, well, Tim, I don't do those smaller time frames. What's the daily tell me? Yeah, the daily 8. Excuse me, that's not the daily. Let me just zoom out a little bit right here between the 8 and the 21. So I think that's where you're coming back to. And so now if you just zoom higher and surge higher, great. That's awesome. But I'll tell you what, if you saw what happened today, and Tesla, boys, Tesla's been amazing. Let me show you this chart of Tesla on a 4-hour, and I missed it. Got 5-8 cross signified by the white bar here. White bar continues to be just this amazing signal. And this is on a smaller time frame, and you get this move from heaven. Just beautiful move. But like if this starts to give way, here you're at 1040, like tax line, form 1040, and you only finished up 0.5%. I mean, this is a beautiful move this morning to only finish up 0.5%. And then like, look at Amazon. If you start losing these names, if they start giving up the ghost, Amazon closing down 1%. You start giving up the ghost here in these types of names. And let me, you know what, instead of going Google, and you get the idea. Let me show you HD. Let me show you a couple of things that absolutely has me concerned. Look at HD and lows, right? And they're closing lower. And so what gives? Well, it's all about this, right? It's XLY. If the XLY, if the consumer discretionary stocks give up the ghost here, and you've got a consumer sentiment number coming out on Friday, that's a big deal. We're 70% a service-based economy, meaning that we buy things. You know, we go and we spend it discretionarily, whether it's services that we purchase, whether it's going to Home Depot to buy drills and lumber and mulch and all that other good stuff. If we lose confidence in the economy, it shows up in XLY. And let's see where XLY is on the daily chart. And so, yeah, if XLY starts giving back this modest move, I mean, look at this. From 207 down to 182, you're like, and that's not that huge dollar-wise. It's 215 is the high. These are the stocks that tell you the consumer is out there spending. And just because it's in some silly ETF doesn't mean it's the end-all to be-all, but it's the Amazons, the Home Depots, the Lowe's, right? You're going to explain Ford away? Like, you know, Ford can't make automobiles, and if Boeing's going to have trouble selling cars, I know we're on the discretionary when I talk about Boeing, we're not going to hit a GDP number. It's already been revised lower. Like, this is all just starting to come into play right now. And so it sounds incredibly bearish. And look, we're just a stimulus announcement away from all-time highs. And you think I'm saying that jokingly, but with the way that crude oil is performing here, yeah, they're talking about stimulating with gas cards and maybe reducing some tax. Like crude oil is, we talked about this last week. So I had the video 7 days ago, today's the 23rd, the 17th, right? 16th, 16th. And look at the names that we talked about. You know, like the names, I gave you a list of stocks on the 16th. And let's just look at them. We'll do this together. DVN, like oil had pulled back, and here is the 7th. So here is the 16th. Talked about the 50-day with Devon. Look at that white bar. That white bar shows up around 50. We'll just call it 54, 55. You're trading 63. You're like, well, Tim, I can't do that real quick math. What is that price wise? Just a shanty way to do it there. It's about 15% since we last talked. And Devin, how about Halliburton? So Halliburton, we talk about it on the 16th with the setup right there at the 21. Next day, okay, we won't do it right from the open. You're looking at about 8-9%. Let's see here. Oh, Nutrient, NTR. Nutrient just never doesn't give you a chance, right? We talked about that. 316 back here doesn't even give you the 21 next day, and you're looking at about 10-11% in NTR. How about Mosaic? Right, and you're like, well, Tim, these were just the themes, the bullish themes. These are bullish continuation themes, and so this is the point I'm drilling at. That look, these pulled back, don't break. With Devin came back to the 50-day, but they're holding bullish structure. And then we did the inversion with the minus sign in front of the charts. And do you want to buy this or short this? We've done that drill the last couple of videos together. And so, look at Mosaic here. Mosaic on the 16th, next day. What do you get? About 15% move higher. What else is on that list? Oh, AA, right? Steel, by the way, steel tariffs come off, right? So that's the move today. But AA, there's the 16th. Here is, and this all came from a screen that I offered up to folks. You're more than welcome to email me for the screen. 317, AA up here about 17% since we last talked. And how about EOG? Right, and some of you, rightfully so, are like, well, Tim, Tesla's had this great move and Amazon's had this great move. Yeah, and my point here is a couple of things. One, you buy on support, buy where your least point of risk is, okay? Understand where your stop is. And there's also more than one way to make money, more than one way to make money. And if you only like trading bullishly, you've got to pick and choose your spots. I would say, pick and choose your ATR charts where you're not extended, where you understand support is. But watch very closely here. Amazon on a daily chart comes up to +2 ATR, right? We're not going to use moving averages. Comes up to +2 ATR. And now you're looking to see if it holds. Does it come back to the mean? The mean is 3,000. We'll just we're going to use round numbers. That's like 300 points away. Okay, and so you'll come back to where? 316. You'll come back to a week, and you give it back in more in a heartbeat if the market wants to retrace. And I think you need to be prepared for that, right? Do you want to initiate a position in Amazon, or is there something that you could do right now? If consumer discretionary may be too risky, and I'm hedging here because look, these videos are for edification, right? You need to put your own trading plan together, or what we do for clients in the shop. You're more than welcome. By the way, 855 real wealth if I can find. I'll just use the old one if it comes up. There it goes. There we are, 855-725932. You need to put the plan together that works best for you with your risk structure. But look at this. Let me show you a couple things that I do like right here. I do like the downside, but you don't have to trade it. How about gold? Boy, gold's got itself a setup going right here. So gold, let's just, and I'm going to walk it down for you here. I like this structure with gold. Holds, you're back above. They're looking at a 5.8. This is a 521 cross. Signified by the gray bar there, 521 cross. So that's on a daily chart of 521 cross. Well, let's come down to the 4-hour. Do we get a white bar? Oh, they have 2 white bars in a row. White bars can lead to really big gains. That's a 5.8 cross. You're like, those are just momentum, Tim. Yeah, but you need something that visually stands out to you. Says, oh, this is changing structure, and it might do one of these. Didn't do it here. Not so much here. We're on a 4-hour chart. But if you understand your risk and you have stops and you're trading your plan, this is a heads up that gold might be getting ready to do something. And if that's something, let's go down to hourly. Okay, you take out, you're right here. Oops, I don't want to zoom in. I want to get a marker. So you're right up here to last Thursday at 1950-ish, right? You take out 1950 to the upside, and you'll probably get a cascade of folks coming into the trade. Instead of, panic selling, you'll get some panic buying. And why is this, by the way? Can we just, Well, it's inflation, Tim. We need to dig in a little bit more than it's just inflation, Tim. Let's look at bonds. ZB, I want to look at ZN. So ZN is the 10-year notes, right? And the 10-year notes just, I mean, this is destruction. And so what's happening here? Like, if you think about what's happening with we could talk about this on the podcast on Friday, with the Russian oligarchs, right? Or just Russia, right? If there's evil being done in the world, your assets are going to get seized or frozen or both. And where do most people who want to put their money in safe places, what do they put it in? Bonds, government treasury notes, right? And so if people don't think that that's the safe place to be, because we can just, this is the first time, I mean, what you're seeing and what we're witnessing from the pandemic to what's happening with assets and things being seized out from under countries and people hasn't really happened before. And so everything from the stimulus in 2020 rolling into the, to this phase of, if you just want to call it all one pandemic-y type of period of our lives, you're seeing play out in lower bond prices, and the lower bond prices are doing what to TMX? Yeah, they're absolutely driving it up, 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 up. And so, but what is that driving people to? If they don't want bonds, where's the next safe haven? It's gold. And I'm not, someone might say, well, why isn't Bitcoin at new highs? I'm not sure that's I mean, I don't know. I can't answer that. But gold is closer. Let's just, the high in gold, 2089. And so is that the course that we're on? By the way, this is a slow, gold's typically a slow trade, but this is a monthly chart, and that, my friends, is a bullish structure. And so, you kind of got it almost a whisk. You gotta look at it here, and maybe it wants to say get another look here on its way. I tell you, if it takes it out, the level I've got is 2300. That's my next stop. If that does happen, I think that gold trade is something that you build into for your edification on a watch list, something to be studied. Okay. And so with that, I hope it helps. I probably missed a couple of things in my notes, but whatever I missed or I feel that is pertinent, we'll bring to the podcast, and we'll make the podcast one of the best research tools you could have going into the weekend. So with that, hope you have a great night, and I will see you at the next update.